Thank you so much for joining us today. I'm Marlon Bowling with you, your tour guide to the ag commodities. Happy Monday, if that's possible. I am joined by the one and only Brian Hoops of Midwest Market Solutions, and we're going to talk about the setup for this week. And it could be an eventful week. Brian, we have a WASDE report that'll be coming out in the middle of the week. Of course, I think it'll be overshadowed by the quarterly stocks, and then you have that prospective plannings report that'll be out at the end of the month. I think everybody's kind of chomping at the bit to get those numbers. In the meantime, we had some new information just came across the wire here a moment ago, and I want to share that with everybody. It's some export sales business that was done over the weekend, but maybe not what the trade was thinking. Let's take a look at what we had here for the export sales. What we had was a sale of 110,000 tons of corn that was sold to Japan, and then we also had another sale of corn, and it was to unknown destinations. And in this case, it was 182,400 tons. So interesting. We had some sales of corn over the weekend. Brian, there were rumors all week long, basically, that we may have done some sales activity, but it was to China. And that was not confirmed here this morning. So does that mean it's good news or bad news? What do you think here?
Well, good morning, Marlon. I think it's implied that this unknown destination category is going to end up being China. The 182 million tons is about 3 cargoes, a little shy of what we were hearing as far as rumors that we were hearing, in that 4 to 6 cargo type range. So I do think this news will end up being positive, end up being China. The Japan corn purchases is probably just pretty routine, but the fact that we finally sold some corn after 2 to 3 weeks of no sales whatsoever, I think will be seen as a little bit of a positive this morning by the trade. Now, we have a window of opportunity here, I believe, for our corn exports to pick up over the next 4 to 6 weeks from the standpoint the Safrinha corn crop, the second corn crop in Brazil, is behind on their planting, and the first corn crop is behind on their harvest. Now, they're not sharply behind, but they're 5 to 8% behind their normal pace. So the fact that there's not this big wave of corn coming out of Brazil right now, and the crop in Argentina is going into retreat, does give us a little bit of an opportunity here to make some sales during this month. So I think that's a positive here for the corn market, and it will try and take its cue from this export business and hope that the USDA adjusts this in their supply and demand report. They may not have to lower exports as much as what is feared, maybe a 5 to 25 million bushel reduction in Wednesday's report. So trade will closely be watching, of course, the WASDE numbers Wednesday, especially production out of Argentina and in Brazil. We should get some private estimates today and tomorrow ahead of that report as well that will probably be a little bit more aggressive in their cuts as far as production goes than what the USDA will be on Wednesday.
Well, let's take a look at our Globex market activity overnight. And we kind of came skidding in across the finish line on the grains overnight with a definite weaker bias. But that's before this export announcement came out. So we finished up last night with the May corn down 3 3/4 at 6.36 per bushel. December was down 4 1/4. So nothing to write home about there. On the soybeans, we had the May down 5 1/4 at 5.13 1/2. July was down 4 3/4 cents overnight. And your new crop November contract, it actually finished up at 13.67, and that was down 6 cents. The problems were in the wheat complex, and man, they really took it on the chin. May Chicago wheat was down 11 cents overnight at 6.97 3/4, under $7. Kansas City May down 16 3/4 at 7.99 1/2, under $8. And if you look at the Minneapolis market, you had May down 7 3/4 at 8.65. We'll come back and talk more with Brian Hoops about our open on a Monday when we come back. All right, we're back with you, and we're talking with Brian Hoops of Midwest Market Solutions in Springfield, Missouri. Brian, we finally, from what I understand, maybe broke loose a little bit of cash cattle market activity late last week again. That seems to be the trend here lately. For some reason, they like to hold on until the last moment. But what did you come up with for numbers anyway?
You're right. It was very good volume. The previous week we saw very low volume as feedlots elected carry over their inventory until last week, but they really cleaned up the show list numbers this week or last Friday, and some very good volumes and good numbers, $2 to $3 higher on a dress basis, and at least $1 higher on a live, and in some cases $2 higher in the Southern Plains. So some really good volume, really good sales. Show list numbers probably, when they're assessed, will probably be down compared to the previous week, and back to more manageable level. The one thing I thought was a little disappointing last week is the slaughter pace, 629,000 head for the week, well below a year ago, which was 657. So that needs to improve. Packers have a lot of margins, about $142 a head to work with right now. So plenty of margins there to work with. Just need to pick up that slaughter pace and put together a big Saturday kill this week. So otherwise, things look pretty good in the market as far as the cash markets go. And I think we continue to see pullbacks in the futures markets, well supported and being bought by the trade, with prices trying to work higher as we go into the spring timeframe.
How does that compare to the cash hog side then?
Well, it's a different market than the cash hogs. In the futures market, completely different as well. We've been exporting a fair amount of pork, but the cash markets have really just been stagnant. We saw the February go off the board. The index was in that mid 70 to lower 80 range, and it looks like April is going to do the same thing. We have another month to trade that market, but it just does not want to leave the low $80 level. So cash markets are really going to have to stage a big rally into the spring, into the summer, if they're going to meet where the summer premiums are being traded at, over $100, $105 in those summer contracts. That's a lofty premium to go and achieve.
Okay, so let's revisit then where we finished up last week, just for a point of reference here on our trade. And on the futures board on live cattle, these quotes provided by bar charts showed that we had April finishing last week $1.32 higher at 165.42. So that was a pretty strong performance as we headed into the weekend. The first 4 months were way over $1 higher at that time. And on the feeder cattle market, the feeders really took charge. April up 217 on the close Friday. They were at 196.02, and May was up 212. Now on lean hogs, as we headed toward the weekend, we had April 70 higher at 84.55, and that was over $1 off of our earlier low of the day. We had the May contract 57 higher at 93.45 on Friday afternoon. Well, Brian, thanks for the time this morning, and good luck trading here this week. Appreciate it. Brian Hoops of Midwest Market Solutions with us. So that's how we wrapped up on Friday, how we're set up for today. Could be an interesting week with the WASDE report right in the middle.